Good evening, everyone. Welcome to the Anderson Report. This is Monday, September 21. There are eight. Now let's get this right here. 4, 5, 6. There are 7 trading days left in the third quarter. Uh, Today was a incredibly volatile day. And frankly, today was one of those days where right out of the chute, for the first time since this sell-off started, um, it what seemed to be clear that there was much more of a sense of, I'm not going to say panic, but there was a decided sense of urgency to sell stocks, raise cash, multiple negative uh, data points or optics overhanging the market. We'll get into those in a minute. And I just felt today, for the first time since this sell off began after the highs September 2nd, that today was a day when the pessimism was much higher, the bearishness was higher, and the feeling was for most of the day that any sale would be a good sale and that prices would most likely go down all day long and close at their lows, which they did not. And I think that I don't think we're totally out of the woods, but in terms of this correction, I think that there's still some more work to do. But today was a constructive day. I'm certainly not going to downplay the fact that the Dow Jones Industrial Average was down 2% and the S&P 500 was down 1.2%. But given the fact that the NASDAQ at one point was down close to 3% and closed literally down just 14 points, really one tenth of a percent, a little bit more than that. Today was a constructive day, and let's just recap the how things closed, and then we'll talk about all of the negative optic headlines that led to today right out of the chute. Yes, DJ, the mega cap growth names in technology space had a nice reversal off the lows today. Apple closed up 3%. And to everyone at Network One, thank you for joining us again. I will also say that I do spots on financial media from time to time. I was inundated with requests for media calls, little Zoom video interviews, comments on the market, either just over the phone or by video. I think I did 3 of them by video by before 2 o'clock this afternoon. And I would just say that it's not a perfect indicator, but usually those calls get much more frequent during days of sharp declines, sometimes even marking a decline that's putting in a low for a couple of things. We might have done that on the NASDAQ today. I'm not ready to say that yet. On an intraday basis, I usually don't like to go over intraday levels on major indices, except for when you have significant turnarounds. We may have had a significant turnaround in the NASDAQ today. It was a green candle. And if anyone's familiar with candlestick charting, that means that it had a long stem at the bottom, marking the lows of the day, and then a close significantly above where the market opened. So the market opened, the Dow opened a bit close to down 5%, close to down 2%, down 500 points. That's pretty much about where the Dow Jones closed, but it was down 900 points at one point. So, look, real quickly here, the data was the Dow Jones Industrial Average down 510 points, 1.8%. It closed 400 points off its low. Um, it was down 900 points at one point during the day. I'll say a couple different times, mid to late morning. The S&P 500 closed at 3281. That was down over 1%, a 1.2% decline. At its lows, the S&P was down 2.7%. The low of the day for the S&P 500 was 3230. Remember that number for the remainder of the week. The S&P 500 peaked on the close September 2nd at 3580. A 10% correction, a 10% decline, which is a lot of people's threshold for whether or not you're in a correction again. But I will say that a lot of times what happens is you get to that down percent level, financial media goes crazy, says we're in a correction, and then that's the low and we rally off that level. Now, the S&P 500 trade, the low of the day was 3230. A 10% correction from the close September 2nd would have been 3222. So by that measure, we came within 8 points of hitting down 10% on the S&P 500. It closed at 3281, so it rallied 50 handles off the low on the day and still ended up down 1.2%. The NASDAQ composite was down as much as it was, it was down between 2.5% and 3% at one point today. It closed basically pretty close to flat, down 14 points at 10,779. Just as a benchmark there, the 50-day moving average for the NASDAQ composite is right around 11,000. That's 210 points away. If the NASDAQ is able to mount a rally after the rally off the lows that it had this afternoon, it'll be interesting to see how it acts if it gets to the 11,000 marker. Russell 2000 significantly underperformed. It had been playing catch up as recently as early last week, but it closed down 3.4% today, down 50 points at 1485. And the transports, which we've mentioned numerous times, got very close to an all-time high middle of last week. They closed at 11,130, down 300 points, or down 2.65%. Airlines were weak, and they have been holding in very well. Clearly, a lot of the stories coming out of the UK and Europe about an explosion to the upside in their coronavirus cases, I think probably sparked a lot of the selling early in the market. Stocks were being hit very hard in overnight trading. Trading in the UK and Europe starts at about 4 a.m. And these stories were out, I think, before their market opened. It was data from over the weekend and the past and late last week about a big spike in their cases and some comments from a few officials in the UK that they may have to consider shutting down certain parts of the country. That's really, remember, the coronavirus outbreaks hit the continent, and the continent being Europe and the UK maybe 2 to 3 weeks before it really became a really big deal here. And so if officials over there were very concerned about a big increase in positive cases, that would spark some concern here that we may be headed toward a second wave, although I view it to be almost inconceivable that we would consider. Trump has been very specific that he will not consider endorsing another nationwide uh, shutdown along the lines of 15 days to stop the spread and then another 30 days, et cetera, et cetera. That was way too detrimentous to the economy. We probably it's very hard to put a formula in it, but I think that the big difference with the increase in outbreak in positive cases that we've had here in the U.S. over the last 2.5 weeks is that it's largely associated with kids going back to college, and the age group 18 to 24 is not nearly at risk to the extent of seniors and people with other illnesses. In fact, the hospitalization rates for people in that range of 18 to 24 that have tested positive in the US over the last 2 to 3 weeks is extremely low. So I can't imagine. I can imagine a scenario, but it's just not going to happen where we would uh, consider another nationwide economic self imposed shutdown. Now, that being said, look, that's not the only negative headline that we had today when, whether you got up at 5 o'clock in the morning or 8 o'clock in the morning, there were just numerous negative data points coming from many different directions that you could tell just with a couple of clicks on your phone or your computer that it was going to be a very difficult day for stock market investors today. And that's why by 4 o'clock, the recovery we had in the afternoon, even with the Dow still being down 2%, I think that it was a constructive day and a much better end result than a lot of people would have anticipated even midday. Yes, Lee's a wild day. Look, I'm never going to not embrace the volatility. Volatility can be very helpful in guiding us toward where the support and resistance levels are in the market. Uh, and if a market's just grinding in a very narrow range and with very small price movements day after week, that doesn't really help you create a framework of where the real support and resistance levels are on the market should it break in one direction or the other. When you have very volatile days like you had today, and like a lot of days we've had over the last few weeks and over the last 6 months, frankly, it when you have volatile days, it gives you a data point to look at as possible support or resistance the next time you have another volatile move that brings you close to one of those data points. For instance, if we were to have a weekday tomorrow or another weekday late, if we were to rally tomorrow and then be very weak maybe on Wednesday or Thursday, the levels that people will be looking at for potential resistance would be S&P 500 3230 and 3222 would be a 10% correction from the September 2nd close, and NASDAQ composite 10,050, 10,500, which it got within 20 points of today. So unless without the volatility, you don't have those data points for a line of comparison on any further weakness. Rick, thank you for joining the program, and the people from Network One, again, thank you. So, right out of the chute today, China updates their trading blacklist, being companies that they will not do trade with. They have updated their trading blacklist, a little bit of a shot across the bow toward the US. They did not name who those companies are, but clearly this headline was aimed at the US the Trump administration and companies who have been doing large amounts of trade with China over the last 3, 5, 10, 15, maybe even 20 years. But they did not name the companies, but clearly a little bit of a shot across the bow from China to the US as somewhat of a retaliation, probably for some of the verbiage that we've been giving China as the source of the China coronavirus, and probably, and also toward the fact that we still have significant tariffs on imports from China. So that was, let's call that the first, that was the initial headline. And then the big headline, big increase in coronavirus positive tests in the UK and parts of the EU. I just spoke about that. That immediately caught everyone's attention and made people think, oh boy, what if this comes here? That's why the airlines were so weak today. That's why the big industrials were very weak. Energy was very weak after a very nice week last week. Energy was up. The energy sector of the S&P 500 was up close to 3% last week. The commodity closed above 41. And all of that started out much lower today with a little bit of improvement toward the end of the day. Let's see. WTI closed at 39.70. So given, look, early last week, WTI was at 37. Had a 37 handle. Maybe it was 37.50-ish. It closed today at 39.70. That's higher than it was a week ago today. Energy stocks still didn't completely recover on the day. They finished down 3.3%, more than the market, but they had a decent week last week. WTI was down $1.60, so it closed probably got back half of its losses from early in the day. I think we'll kind of take that for the commodity. Now, the second big headline, not really a headline, but extreme vitriol on the political landscape in Washington, D.C., all as an offshoot of the potential nomination from President Trump of a Supreme Court justice to replace Ruth Bader Ginsburg, the longstanding Supreme Court justice who passed away on Friday. Just to the point of making people feel that now we'll never get a stimulus 4.0. There's so much hatred going across the aisle that now we'll never get a stimulus 4.0 program. And even some talk that is this going to jeopardize the requirement to raise the budget deficit by the end of the month so that we don't go into some type of technical government shutdown, although I'm sure that it wouldn't be even noticeable or felt by anyone for probably a week to 10 days. Pelosi has said as recently as late last week that there's nothing standing in the way of increasing the budget deficit. But then over the weekend, after when Trump said he was going to nominate a Supreme Court justice shortly, she said to George Stephanopoulos on This Week Sunday show, This Week with George Stephanopoulos on ABC, that basically she'd consider impeaching Trump, although she doesn't really have any grounds to. That, of course, I didn't stop her before. She'd consider impeaching Trump just to delay him from nominating a Supreme Court justice. So when you have vitriol like that going on in D.C., it can't be a positive for the market. Now, the third big story. global money center banks money law a controversy about global money center banks involved in a massive money laundering controversy for going back for 25 years. Most of the cases, frankly, are over 10 years old. That sent the big money center banks, both headquartered in the U.S. and in Europe, although I will say mostly in Europe, uh, into a tailspin. Deutsche Bank down 8% on the day. A very troubled stock and a very troubled company. Obviously, if anyone's been following the Deutsche Bank story over the last 5 years or so. And JP Morgan down 3%. Both of those companies were named as companies that had hundreds of SAR reports that were uh, filed. A SAR report is a report called. It's really a strategic. It's a suspicious activity report. If there is big amounts of money, technically more than $10,000, but in this case it was probably hundreds of thousands, if not millions, being moved electronically, um, allegedly by people that the banks should not allow to move those sums of money around the world without being reported on. Excuse me. So that sent most of the financial stocks really on a tailspin for most of the day. The money center banks were affected much more than the regionals, but the financial sector was down 2.5%. Um, and then kind of a minor story, but not really a minor story if you're involved in any of these SPAC names or if you're involved in any of these electronic vehicle companies, aside from Tesla. There's apparently a significant enough charges of fraud with this electric truck company Nikola that the founding person, I want to get this right before I just kind of throw it out there, that the founding person, original CEO, and their executive chairman, Trevor Martin, who's a little bit of a renegade type guy. You can tell if you ever hear him speak. He's being charged with fraud, not legally yet, but there are claims that he fraudulently misrepresented major aspects of the company's business, financials, progress they'd been making, et cetera, et cetera, et cetera, et cetera. He has stepped down. The stock was down as much as 25%. I think it might have closed maybe about down 20% or so. I just think it's going to cause people to take a much closer look at some of these reverse mergers that go on where a company that could never, and I've spoken about this, that could never IPO on their own merits does a reverse merger through one of these special acquisition companies called a SPAC, which means special purpose acquisition companies. And then they all of a sudden become a public entity, although they never would have been able to become a public entity had they not done a reverse merger with a SPAC, where the SPAC takes on their name, et cetera, et cetera. He's out at Nikola. Um, it's a, as the major news networks would say, it's a developing story. We're going to hear there are multiple layers of the proverbial onion to be peeled back on the Nikola story before we really find out what was really going on and whether or not there really was any fraud or nefarious activities going on. So the market was just hit this morning by multiple um, uh, pieces of negative news, or what I would call not just negative optics and negative news, to the point where it really didn't have a chance the first few hours of the day. And it really certainly did have the feel of one of these markets that could just crater and go down and down and down and close at the lows and then maybe have a lower opening tomorrow. That didn't really happen. It had a nice rally during the last 90 minutes of the day. I mentioned that Apple was actually green on the day. The VIX was up as much as 18% at one point in time, mid to late morning. At 3 o'clock, it was only up 10%. You know what? For some reason, I didn't note it at the end of the day, but I got to think it was up less than 3% by the time the market closed at the end of the day. Now, the breadth of the market did not really improve as it did improve. It was advanced declines at one point in time were almost 10-1 negative. They went out 6-1 negative. And when you have a sharp rally during the last 90 minutes of the day, a lot of times the advanced decline stats just won't catch up to the extent that a couple of the major averages do. Again, I mean, the Dow, even though it was down 500 points in the close, it was down as much as nine. So it was down as much as 900. So it almost cut its losses in half. In fact, Rick has a great question here. Can you explain the disparities between the major averages, DJIA, transportation, S&P, beyond the current changes that were made? Well, so of course you have this dynamic where the S&P 500 and the NASDAQ are very heavily capitalization weighted indices, and they are heavily influenced by the biggest stocks in the market or the stocks with the highest market cap. Apple clearly has the highest market cap in the market right now, and then there's a whole bunch of other stocks behind it. So since technology is the largest sector of the market, the big tech, mega growth, mega cap technology names clearly have the most influence on the NASDAQ composite, but also have a much higher influence on the S&P 500 than they did 2 years ago, 3 years ago, 5 years ago. It used to be there were three major sectors of the S&P 500. Energy / oil, technology, and financials. And anytime one of those sectors got noticeably above 20% of the total index, people would feel that that sector is probably a little overextended and maybe too far ahead of the rest of the market. Well, that has not been the case over the last 3 to 5 years, as energy has been under pressure for most of the time. Oil is not $100 like it was for many years, up until maybe 2015. And technology has just been on this major boom, okay, helped by 4G, helped by the explosion of internet traffic, helped by, innovative technologies that have been facilitated by 4G. Of course, it's interesting to speculate what type of technologies will be facilitated by 5G, but that's, I think, still minimally a year and a half to 2 years away for full-blown 5G. So, moves in technology are going to affect the S&P and the NASDAQ much more than they are the Dow Jones Industrial Average. The Dow is a mathematical average where a $1 move in any stock, whether it's a $50 stock or a $300 stock, has the same impact on the Dow. The transports is a similar situation in terms of the construction of that index. The transports is largely made up by autos, rails, trucking companies, other transportation and delivery companies, Federal Express, UPS. Uh, but let's go on to the breadth of the market for a couple of minutes. The advanced declines on the NYSE were -6 to 1 negative. Certainly disappointing numbers, and certainly worse numbers than you would expect for the S&P being down 1%. On NASDAQ, there were 4 stocks declining for every one that advanced. It's certainly consistent with the Russell, significantly underperforming, down 3.4%, when the Dow is only down less than 2%, the S&P is down 1.2%. But part of that is that the market looked so bad until at least 2 o'clock that the rally at the end of the day is usually going to overlook a lot of the secondary and tertiary names in the Russell 2000, and some of them may have cut some of their losses late in the day, but still ended up as a declining stock with a negative price move on the day. Because the way the advanced decline stats work is it's just the number of stocks that have advanced and the number of stocks that have declined. So if a stock is down 5 or 6 points for most of the day and finishes the day only down 50 cents or $1, that's still a declining stock. So it'll be interesting to see tomorrow if we get any improvement, if we have a flat to up market, if we get any improvement in the advanced declines. Now, so on the day, this is what we had. 11 major sectors in the S&P 500. Information technology gained 0.75%. That's the rebound in the mega growth tech names. Clearly, the names that have been driving what I've been calling the internet traffic trade. That move was probably led by Apple, plus 3% on the end of the day. That's the only advancing sector in the S&P 500. In terms of the decliners, I mentioned energy down 3.3%, financials down 2.5%, industrials a rough day down 3.3%, materials a rough day down 3.4%. The industrials and the materials have been two of the better acting sectors over the last 2 to 3 weeks. And real estate down 2.7%. I think if people feel that there's going to be, look, the early thought was, oh my God, we're going to get a big second wave of the coronavirus. Look what's going on in the UK and Europe. Frankly, I don't think that's going to happen that way. But that's going to affect real estate, since you're talking about office buildings, public places, malls, strip malls, anything that involves big common areas, people going back to work in a normal work environment. If any of that's put on hold, the real estate companies are going to get hit. So, just as a little bit of a snapshot on the year, I went over a lot of the monthly numbers yesterday. On the year now, the NASDAQ composite, even though it's down maybe 11%, 11.5% from its high on September 2nd, it's still up 20% year to date. The S&P 500 is up 1.6% year to date. The Dow Jones Industrial Average is minus 5% year to date. Again, the Dow is at 27,148. The Dow closed just above 29,000 on September 2nd. It has given up not quite 2,000 points since then. The Dow closed at 27,148. So it's given up about 1,800 points since that close on September 2nd. That's close to 7%. 8%. And the Russell 2000, even though it was doing very well up until middle of the day Wednesday last week. The Russell 2000 down 11% year to date. A lot of work still to do for the Russell to get back to even on the year. So look, tomorrow will be an interesting day. Seems like, yeah, Rick, they're a lot more out of sync than they would normally be. Well, that's volatility. I mean, you've had a lot of volatility in the market. You don't have a lot of the closest thing you've got to a mega growth, mega cap tech name in the Dow Jones Industrial Average would be Apple. I don't even know if you would consider um, I guess you'd have to probably maybe throw Microsoft into that category, but I don't think you'd put Intel in that category right now. Salesforce is a new member of the Dow, but Salesforce has this little albatross where it had gained 25% just after its earnings report, literally 3 days before it went into the Dow Jones Industrial Average. So you've got this stock that's just a behemoth in its industry, the cloud data management space, and it goes up 25% in market value and in price days before it goes into the Dow Jones Industrial Average. Any slippage from that level is going to hurt the Dow. So it's almost a little bit of a bad luck for the Dow Jones Industrial Average to put Salesforce in just after that 25% price bump. If it had gone in a week earlier, the Dow would have benefited from that 25-point price bump, probably to the tune of maybe a couple hundred points. So, what would 25 times 8 be? Yeah, 200. Okay. So, look, I don't have a whole lot else right now. I think we're going to have more volatility tomorrow. We're going to have more volatility the rest of the week. There's the big question is, and it's 7:40 on Monday night. Are the markets going to follow through with the partial recovery that they had late in the day today and have maybe a turnaround Tuesday after 3 down days or maybe 4 down days if you count Wednesday? So thank you, Maddie. And we will, we will have to see. We don't know what kind of headlines yet we're going to get out of the UK and Europe. If there's any further update on their coronavirus count, that could be an impact. And then we could have, more impact on this. We could have more input on this TikTok, Oracle, Amazon scenario. We could have more input on a number of other items. But when you have headlines like you had today, it's just tough to recover. And frankly, it's a little bit impressive that the market recovered to the extent that it did at the end of the day. I really want to thank everyone for joining the program. This is my YouTube channel, The Anderson Report. I am Tim the Source Anderson. I also broadcast on Periscope at TJ Anderson 12. If anyone has not subscribed to the channel yet, please subscribe by hitting that red subscribe bar on YouTube. Hit that little bell next to it. You'll get a notification on the next broadcast. My Twitter handle is TJ Anderson 1. I did get numerous messages today. If I couldn't get back to them all, I apologize. I was getting inundated with media requests throughout the day, which is almost a positive sign because usually that happens. Usually that happens within a couple days of a market bottom. So everyone, enjoy the rest of your Monday evening, and we will all talk again tomorrow, most likely at 7 p.m.